Hello, thanks for clicking on. This is Russell Rhodes. I blog frequently about volatility in the markets, and I put a blog up today, Martin Luther King Day actually, January 18th, 2016, where I was discussing an article that was out there talking about using the price of oil versus VIX as a stock market indicator. Put a blog up this morning and I got a few questions, so I thought I would expand a little bit and throw a video out there today. Now, what actually happened was there was an article that came out saying that the last couple of times that VIX was higher than oil, it was a great buying opportunity with respect to the equity market. And actually what the article was saying is that on August 24th, VIX closed higher than oil, and then back in March of 2009, very close to the end of the equity slide that was associated with the great financial crisis, VIX was higher than oil. However, there are a couple of issues that I had with that, so I wrote a blog, and now I'm going to talk about it a little bit further. So what I did was I gathered data from the first day of 1986 through the end of 2015 and looked at VIX versus oil. Now, one of the things that I did for VIX, because VIX used to be calculated in a little bit different way, and it also used to use S&P 100 options instead of S&P 500 options. I actually used what is still quoted under the ticker VXO for data from 86 to 1990. I just wanted to see what volatility did relative to oil back, honestly, during the 1987 crash. So I used data from CBOE. I went to the EIA.gov website and took the daily WTI Cushing Oklahoma price for oil, and then I compared the prices. There are some days when the equity market was closed that oil was open, but I narrowed the data down to only days where both were open, which means that maybe I took 5 or 6 data points out of a few of the years. Now, here's the first thing that as I was working with the data, I noticed that on a pretty regular basis, especially back in the 80s, VIX was higher, or VXO at that time, was higher than oil. And of course, in 1987, VIX average was up around 29 or so, but you had 3 pretty solid years here with the average for VIX well above the price of oil. And of course, the price of oil, part of the influence behind the rise in the price of oil has been inflation, and there's some other issues that have come up, but inflationary pressures have pushed oil up. Inflation has no impact on VIX. I never thought about that before, but it doesn't have any impact on VIX. 97 through 99, the price of oil was relatively low, and VIX was on average a little bit higher. Than we were going into the internet bubble, and I think we had one more year, 2002, where VIX was a little bit higher than the price of oil. It's kind of a tough year for the equity markets. If I'm thinking correctly, 2002 was. I know it was a tough period coming off the internet bubble. Maybe it was the end of that. So the other thing that I took a look at was, well, how many days each trading year? And just assume that there are about 250 trading days each trading year, or trading days each year, barring a September 11th type situation where the markets are closed. But typically it's 250, 251, 252. Notice that there are several years where VIX was greater than oil for several days. Probably shouldn't have circled 1992 on this one. And then we had the same period where on average VIX was higher than oil, and on a in fact, goodness gracious, that 1998 number, 251 days, that might be every trading day in 1998. I'm gonna have to go back and check that. That number just popped out at me as I was speaking. If there were 252 trading days, I'll bet you the difference between VIX and oil, the one day that oil was greater than VIX was probably pretty minuscule. Then we got a few more days in the 2001, 2002 period. But then what happens is you see after 2003, '04 through '07, we have no days where VIX is higher than oil. Uh, I think that the emergence of China as a global economic powerhouse and inflationary pressures and a few other things uh, attributed to this. Then in 2008 and 2009, both of those years, we had 41 days where VIX closed higher than oil, and needless to say that in 2008 those 41 days were in the final quarter, and in 2009 those 41 days were in the first quarter of the year. That's when we really went through the great financial crisis. And once we came out of a period where VIX was greater than closing greater than oil, heck yeah, it was a great buying period. But I'm going to show that if you had, you had taken that VIX greater than oil as a signal the first day that it happened in 2008, you would have suffered a little pain before you recovered. And then, of course, in 2015, we've got one single day there, and that was August 24th of this past year, which was a pretty rough day for the equity markets, and a day that the first time we had seen VIX up over 40 in some time as well. So I took a look at the two time periods that were discussed with respect to VIX and oil. And in this 2008 and 2009 period, in fact, this chart is the S&P 500, and it begins with the first day that VIX was higher than oil. And what I do is I'm going to circle the time period where VIX, more often than not, was higher than oil, and you can see that the equity market went from the S&P 500 went from a little bit under 900 down to it dipped below 700. The last day that VIX closed greater than oil, the S&P 500 was actually at, I believe, 721, which, hey, looking back, that's a great price to have gotten into the stock market. In fact, we were up almost 50% before 2009 was over with from that time frame. Problem is, with the value of hindsight, you could see, yeah, that was the last time that VIX closed higher than oil, but you didn't necessarily know it until you were looking at it in the rearview mirror. And then the other time period that was cited recently, August 24th, that is the only day that VIX closed higher than oil, and we've basically done just about a round trip in the equity market since then. Good, I don't even think that anybody would have thought of it as a signal at that point, but that's the last time VIX was greater than oil. Now, today is a Monday. It's a U.S. market holiday. I think the futures were under pressure, and oil was under pressure. So it is very possible that on Tuesday, January 19th, that VIX may close higher than oil. I just want to throw fair warning out there that it might not be the indicator that some people think it is. So, just wrapping up here, price of oil has been in line with VIX for several years. There are several reasons that this is disconnected, but it really does have to do with, has very little to do with the equity market. Let's put it that way. The divergence between VIX and oil has to do with the global economy, some geopolitical things, and just plain old inflation. So the two prices have come in line, but I would just be a little hesitant to use the relationship between VIX and the spot price of oil in Cushing, Oklahoma, as some sort of a signal. So with that, thanks for clicking on, and we'll keep an eye on those two markets. We'll keep an eye on a lot of other things, as we are definitely in a hectic time right now. So thanks a lot for watching.